Hey everybody, Mike Nelson, CEO of Efficient Lending Incorporated. We're a mortgage brokerage firm located here in Colorado and in Florida. All right, we are on my fifth installment of my 5-minute-ish video series on how to choose the right mortgage for you. And this fifth installment is on down payment, and I am passionate about this topic. It is really important as it relates to mortgages. If you want to fight expense in your mortgage, really think about term and think about down payment. I say this all the time on my blog series, video, YouTube, wherever you pick my content up. All right, let's jump into down payment and why it is so important. Let's just understand the overriding principle of down payment. When you put a greater down payment on your home, in essence, you are paying yourself, you're not paying a lender. I'll talk to a lot of people and they see down payment as like this expense, kind of like going and buying groceries or buying a car or buying season tickets to your favorite sports team. And that's really not what a down payment on a mortgage is. Think about it. When you buy a house, you're making an investment, and that investment is subject to the rise in the market, and it can be subject to a market downturn as well. But think it through. Let's say the market's appreciating, and I think the numbers came out today at 4.8%, and you decide to put $5,000 more down payment into your home, that $5,000 is going to appreciate with the value of your home. You've paid yourself, and that $5,000 extra down payment you made is appreciating at whatever the market rate is. It's a really important concept. So look at down payment as paying yourself and not paying the lender. Okay. I don't think I need to do a mathematical example here. I can, so call me if you really want me to, but I hope we can all agree that if I put 10% down payment versus 5% down payment, the interest expense on a home with a greater down payment will be less, and therefore the cost of the loan is less. So your two greatest weapons to fight expense on a mortgage, believe it or not, it's not interest rate, it is term and down payment, and I can prove that with math all day long. All right. Let's jump into the nuances and some of the subtleties of down payment so you can choose the right one that's right for you. First off, you have to understand, down payment requirements change with the certain type of loan that you are trying to get. So for example, on a Fannie Mae first-time homebuyer program, you can do as little as 3% down payment. On the other hand, let's say we're looking at an exotic non-QM loan, bank statement loan. You got to bring 20% to the table or you can't even get the loan. So make sure when you're working with your loan officer, you understand the nuances of down payment as it relates to the approval of your mortgage. Okay, so that's important. Government conventional loans all have different down payment requirements. For example, a 20% down payment in a conventional loan, you don't pay mortgage insurance. So there are nuances there as well. The other thing that's important as it relates to down payment is the buyer type. So if you are buying, let's say, an owner-occupied home versus an investment property, the mortgage you get will have different down payment requirements. Single-family detached homes have different down payment requirements than a 1 to 4 unit home, a duplex, or even a condominium. Okay? So two important things about down payments, just to recap here for you. Number one, pay yourself, don't pay the lender. Put as much down as you can. And number two, the loan, the product type, the property all matter as it relates to down payment. All right, that's the end of my fifth installment. I want to wrap it up with just this thought for you. First off, well, I guess it's a couple thoughts, but first off, thanks for spending time with me. I can't thank you enough. I always appreciate it. And the second one is this. If you really want to choose the right mortgage for you and you want to fight expense in a mortgage, look at your mortgage in terms of term, down payment, the product, and the interest rate. And if you look at these 5 videos and you apply all those ideas to those 4 components of a mortgage, I promise you're going to get the most competitive mortgage you can, and it will turn out the best for you over the long term of owning your house. All right, thanks again for your time. I wish you the greatest of success. Feel free to call me anytime.